Hey guys, what's up, how's it going? My name is Robin. Welcome back once again for another video today. And in today's video, I'm going to be showing you guys the stocks I'm going to be adding inside my TFSA today. So if you guys are brand new to the channel, my name is Robin and I am a Canadian investor, and I basically built this channel to show you guys how I built a dividend portfolio from scratch. And I basically been doing these videos to show you guys updates along the way, showing you guys how I built this portfolio completely from nothing, been documenting the dividend growth, how much money we've been earning, and I'm also showing you guys all the stocks I've been buying on a regular basis. So before we get in the video, I just want to say really quickly a big thank you to everybody who supports the channel. The last video I published on this channel did absolutely crazy, so I just want to say a big thanks to everybody who likes the videos, everybody who subscribes to the channel. Without you guys, I wouldn't be doing these videos, so thank you very much. And once again, just a friendly reminder, if you guys do enjoy the video, please be sure to give it a big thumbs up. If we can get 300 likes on the video, I'd very much appreciate that. So the format of this video is going to be pretty simple. What I'm going to do is I'm going to spend a little bit of time first here talking about some goals and give you guys some, I'm going to update on my dividend investing case study and whatnot. And then we're going to jump inside the portfolio. I'll give you guys an update on how my stocks are doing. And then finally, I'm going to be showing you guys the actual stocks that we buying today. So if you guys want to skip some of this stuff and you guys want to go right into the portfolio, feel free to do that. But for the other of you guys who actually want to watch and learn more about why I'm doing this dividend investing case study, watch the next little bit. So when I first started this portfolio, one of the big things I wanted to do was to make a dividend portfolio that would eventually pay for everything I have. And even though investing is a long process, and I know it can be a little bit boring at times, one thing I wanted to do was to kind of just show you guys how even just putting a little bit of money inside a portfolio over time can grow and make a big difference. So what I wanted to do to kind of make these videos more interesting is to show you guys, how just some of the little things you can do, and as you invest and grow a dividend-based portfolio, you guys can see some of the ways it can make your life simpler, and even just spending, getting a couple more bucks every single month and growing that passive income stream over time, it really does add up. So as you guys can see here, I created this little spreadsheet where I kept track of everything, and like I said, the goal is to buy everything I own with my dividends and live off my dividends completely one day. Now I know it's going to take a long time to go, and if you're like me, I'm kind of like most people, I don't have thousands and thousands of dollars to put in the stock market. It's kind of like a slow process, right? It slowly grows over time kind of thing, but that doesn't mean you can't start to enjoy some of the simpler things. So one of the first things I did, as I did in my last video, is I mentioned that I wanted to make enough money to pay for my cup of coffee every single day, and then I got a French press to make my coffee, and then I bought 2 drinking cups to drink my coffee. So these are just little things that I wanted to do to show you guys that, just by investing your money, you can enjoy some of the more simpler things in life. And the next thing I want to add to this list was I want to start spending some of my monthly dividend income on groceries every single month, because I think groceries is something that we really take for granted, especially in the western part of the world. So as you guys can see here, I went to the store and I bought a bunch of groceries, and I just want to show you guys that, the goal was to spend $8.25. Now I actually spent a little bit less than that, but here's everything that I got from the grocery store. And I know it doesn't look like a lot, but this is stuff that we earn for free by investing into companies. We have that dividend income coming in, and this is stuff that's going to slowly grow over time. So, I'm going to go do a grocery trip once per month, and every single time I do this, I'm going to show you guys, how much this is growing over time, and we can just appreciate some of the free things that our dividend income is giving us. Alright guys, what's up, how's it going? We're inside the portfolio here today, and we're going to talk about the TFSA first. I'll go over the returns that we got inside the portfolio, how the stocks are doing. It's early morning today. It's 9:50 a.m. on, I do believe it is a Monday morning. I just kind of got up like not too long ago, so just kind of had my cup of coffee, and I'm waking up here, and I decided, hey, let's do a video. It's early in the morning, let's get her done. So this is the TFSA. We have $12,981, almost $13,000 in the TFSA. Over the past day, we are currently up $28. As you can see, the stock market is just opened up, and we're a little bit delayed, so everything's not 100% yet. Over the past week, we are 1% inside the portfolio, which is $74. Over the past month, we are up 4%. And over the past 3 months, we are up 6%. And all time, we are up 7%. Now, keep in mind, I did make a big deposit recently, and that big deposit, Wealthsimple Trade, obviously because I added a huge chunk of cash into the portfolio, it's kind of pushed the overall return down. And that's something to keep in mind as you buy into a stock. If you're putting large deposits in, all those gains you get will kind of get pushed down in terms of percentages. So don't worry too much about the percentages. As long as you keep buying and stuff like that, it will grow over time. So as you guys can see, the $5,000 from the REIT portfolio that we had way back a couple weeks ago in my personal account, I kind of withdrawed. I put it into my TFSA, and now we're basically going to put it back. We're going to put it inside my TFSA, so that money can earn tax free. And I should have did that a while ago, but I wanted to get it done before the end of the year so that we could do the withdrawal and contribute and stuff like that. Still have lots of contribution room yet, and I do have another account in my Wealthsimple Invest account with about $53,000. So that's where most of my contribution room is. But I still have lots going into the new year, so we should be good to go. So since this is the REIT money, most of this money will be going back into the Canadian REITs, although I do want to kind of divide it up a little bit. And what we're going to be doing is we'll take this $5,000 and I'll spend it over the next couple days, maybe towards like the end of the week. We'll kind of spend it and get through it all, so that we can kind of spread it out over the course of the week. It's up to you guys how you want to do this. You can just, if you have a bunch of money at once, you can just spend all at once, or you can save it and kind of split it up over a couple days. It's up to you guys. For the sake of like the videos and stuff and whatnot, I'll split it over a couple days and kind of thing, and maybe we'll spend like $1,000 every other day kind of thing, or something like that. I don't know. We'll start with that and kind of go as. And by the way, guys, if you guys are following the channel and you guys want to use my affiliate link, I'll put my affiliate link to Wealthsimple Trade in the description of this video. I'll also put my referral code, so if you guys need a friend to get that free $10, you guys can check out my referral code, and I'll greatly appreciate that. So here's the stocks inside the portfolio. Once again, guys, as you guys can see, today we're going to be focusing on the ETFs first, because the ETFs are my main way of investing. I think ETFs overall is a solid strategy to invest, and I base the bulk of this portfolio off ETFs. Now I do have a couple ETFs I want to trim down on in the future, but going into 2021, the two ETFs I'm going to focus on specifically are VFE for the Vanguard S&P 500 US stock funds. This is our growth-based stocks, and even though this is a dividend portfolio, I still think growth-based stocks are important to have. And then at the bottom here we have VDY as well, and this is a Canadian dividend-based ETF, and this is like the broader Canadian. If you look at like a lot of the big Canadian dividend companies, like, you know, the Enbridges, the Canadian banks, all that kind of stuff, this basically holds a lot of that stuff. A lot of these individual stocks that we hold actually are held in VDY. I'm just buying individual ones to play around with and kind of do my own thing. But like the bulk of this portfolio is going to be in ETFs, and I kind of want to hold about, I think, 80% of the portfolio in ETFs. Maybe about like 20% in my own stocks I kind of pick here and there kind of thing. I kind of pick individual ones and kind of track them and see them. But even if I screw it up and I pick stupid stocks, at least the overall base of my portfolio will grow. And I think most people should follow the same kind of route to some degree. You don't have to do like 80%. You could do a little bit less. You could do a little bit more. It's up to you guys. But that's kind of what we're going to kind of shoot for. So the first thing I'm going to buy is a couple shares of VFE. It's currently trading at $83 Canadian, and we are up 0.47% in the past day. So as you guys can see, the reason why we buy in the S&P 500 is because historically it is just one of the best funds to buy, and US stocks historically do better than Canadian stocks in the long run, right? Like, this is a slow growing fund. Some of our other Canadian stocks will probably outperform the S&P 500 going towards the end of the year, but eventually at some point in time the S&P 500 will just overcome it. And it's important to have growth stocks, especially if you have a small portfolio, because that money needs to grow somehow, right? So we're combining high growth stocks with low dividend yields with Canadian stocks that have growth and dividend yield. So we have kind of a bit of everything there. So the Canadian stocks are more like a little bit of growth with lots of dividends, and then the US stocks are low dividends with lots of growths. And that's also good for tax reasons inside the TFSA as well. So I'm going to buy about, let's see here, I'm going to buy about 2 shares of VDY. Actually, we'll buy 2 shares of VFV, and then we'll put that order through, and then going to buy a couple shares of VDY as well, because 2 shares of VFE is already $167, and I want to save some of that money today to buy some REITs. So we'll go back inside the portfolio, we'll go back inside the TFSA, and VDY is kind of down at the bottom here, and VDY has been performing pretty good for us. We're up 11. How much are we up? We are up 11.33%. So that's almost 12% over the year. And we had a lot of this money in the fund before the crash happened. So this fund is doing really well for us. And I'm just going to keep throwing away. And it's also got a nice monthly dividend. Really, really cool fund for Canadian stocks. I'm a big fan of it. Also really low fees. And it is a Vanguard fund. And Vanguard funds are pretty good. As long as you do your research and you make sure you're buying the right fund, they're pretty solid. So we'll buy about 160. Let's buy 5 shares of VDY. Just kind of throw those in there. I'm not worrying too much about balancing things because, you know, we have a big chunk of cash. We'll kind of balance it as we go through. I'm not too worried about that. And I do put money in this portfolio almost on a regular basis whenever we have free cash, and basically throwing it all at this portfolio. So I'm not too worried too much about the balancing aspect of things. We'll kind of make it work as we go kind of thing. And the last 2 stocks I'm going to buy for this video are going to be, one's going to be a REIT and the other one's going to be a stock I talked about in a previous video. So I talked about Manulife in the last video, which, by the way, that video did phenomenal. I just want to say a big thank you for everybody who watched that video and everybody who liked that video. That video was the best performing video on my channel that I've ever done. And I basically just recommended a stock that I was buying, and I showed you guys my journey and my plans going into the new year. And I think Manulife still is one of those really solid Canadian stocks that has a lot of growth, a lot of potential to go in the future. As you guys can see, it's still down 11% and it's performed quite well for us. We're up 14.43% with, you know, a lot of stock appreciation probably most likely to come in the next year, and it's got a solid dividend yield of about like almost 5%. So I think this is a really good buy, and we're going to keep buying Manulife. So I'm going to buy about, I think I'll buy about $100 worth of Manulife. We'll stick that in here. And then the other stock, the last stock I'm going to buy today, I'm just going to take a quick peek and see how much money I actually spent today. I'm trying to shoot for about $1,000 today, so we'll go with something like that. Let's go here. We have 4,000, so we still have, let me hit refresh here. Sometimes there's a bit of a delay here. Just want to make sure everything's here. So the last stock we're going to buy is going to be H&R REIT. And H&R REIT is one of the stocks I held a lot inside my REIT portfolio. Now the REIT portfolio is gone, so you guys can't see the returns, but I was sitting on a return about plus 40% with H&R REIT. And year over year, they're still down 32%. A lot of the REITs got hit hard, but as you guys can see, when the markets opened up, the REITs recovered. So I do believe at some point in time, a lot of the REITs will eventually get that stock appreciation, and they have nice dividend yields. Like H&R REIT has like a 4 to 5% dividend yield. RioCan has a 5 to 6%. Wait, is it 4 to 5%? I can't remember after the cut. I think it's around 5%. But you know, even like a 5% dividend yield with potential to have huge stock appreciation in the future, I think is a good buy. And in this portfolio, we're down a little bit because we've just been buying over the past couple weeks, so we had to move the money through back into this portfolio. But in the last portfolio, we were sitting up like plus 40% or something. So I'm still going to just kind of buy it, as I still think it has potential to recover. And I mean, being down 30%, I think it has tons of potential to recover. So we're going to buy a big chunk of H&R REIT. I'm going to put about $250, I think, in H&R REIT. Because, and keep in mind, most of this money was in REITs, and I want to kind of pull this over. So we'll take a quick little peek here. I want to see how much money I have, and if I have a little bit left over, I'll probably put a little bit into RioCan too for the day, just because I did have a lot of RioCan in my previous REIT portfolio as well. I just want to double check this. So we have $300. Let's put a couple bucks into RioCan as well. Once again, RioCan, you know, everybody's talking about them. I still think they're a good company. They're gonna recover. They still have a decent dividend yield even as it is. So I'm gonna put about $150 into RioCan. So let's buy that. And I think that's gonna be it for today. I think we're done for today. I kind of want to space this out a little bit just so, you know, it makes good content. It allows you guys to see like on a daily basis when I'm buying. And then it's never a bad idea to kind of take it slow when you're investing. Like, don't be afraid to be like, you know what, I have $1,000. Let's put, you know, $200 every day or kind of thing, or every other day, just so you can kind of, you know, especially just so you don't like make a bad trade and you put all your money into something stupid, and then, you know, like try to keep a level headed. And there's nothing wrong with doing it slowly. So here's our account, guys. That's our stocks for the week. I don't think we have any dividends coming up, so I'm just gonna double check here really quickly. But it looks like we have no new dividends today, just the ones from previous days. So that's the stocks I'm buying in today's video. So I hope you guys enjoyed this video. Once again, let me know what you guys think in the comments. And if you did enjoy the video, please give it a big thumbs up. And I'll link to an end screen to the last video I did where I talked about Manulife. I'll link to that video, so you guys can click that end screen if you want. And there'll be another video if you guys want to check that out. So thanks for watching, guys. Hope you guys enjoyed this video, and I'll see you guys later.